Hey everybody, Colin Plume, CEO Noble Gold Investments. We've got a great show today. Lot to go over, talking about unemployment reports that have come out, what they mean. Obviously we mentioned what Jerome Powell has been talking about for the last few weeks, but we had some reports come out over the last few days. So let's dive into what the reports are saying, what the news is saying, and then I'll make some comments on what's trending out there. So let's get into this one first.
So the economy could be at a tipping point. For the first time since the pandemic, there are more people looking for work than there are jobs available for them. The new data comes after President Trump fired the country's labor stats chief over weak job numbers. News Nation's Alicia Nieves is live on Wall Street for us this morning. Alicia, how concerned should we be about the state of the job market right now?
Hey, good morning, Marky. We don't want to be an alarmist of any kind, but I think we have been covering economic data for the last couple of months. There have been some positive signs, and now we're starting to see a tipping point, at the very least, a shift happening in this data. And it's important to kind of get a full understanding, kind of a clearer picture. We're actually going to get that this week from the labor market, and we already started to get some of it. Yesterday, we got the JOLTS report. Today, we're going to get some jobless claims numbers. And then later on, tomorrow, we're going to get the big important jobs report. So far from the JOLTS report, we're seeing further signs of the labor market that is cooling down. For the first time since 2021, there are actually more people looking for jobs than there are actual vacancies. The JOLTS report showing that the jobs opening was about vacancies was 7.18 million vacancies for July. The last employment report showed 7.2 million people are out of work. Now, this report also showed and highlighted that there was an uptick in layoffs. The pace of hiring, that is slowing down, indicating that hiring managers, they're not rushing to fill those vacancies. A few people, are job hopping, choosing instead of job hopping, they're choosing instead to stay put amid the kind of uncertainty with the labor markets. A lot of companies just want to see how Trump's policies on trade and immigration, how those are panning out. What is really interesting, though, with the data, while it is starting to cause concern for some economists, even some in the White House, you've got and the Fed as well, Wall Street is actually optimistic about this. Let me break this down, because bad labor news is actually good news for those who want a rate cut, since rate cuts are a tool the Fed typically uses to heat up a cooling down labor market and get us back to the 4%. We're closer to 4.2 right now. But particularly with this data, JOLTS is showing that with more people being unemployed than there are job openings, that's actually going to help curb inflation, because inflation ticked up in 2021 because you had so many more people able to bounce around, get higher wages, and could afford the inflationary pressure. So in terms of probability for a rate cut, because we focus on that a lot, it affects a lot of people's mortgages, ability to borrow, if you're in the market for a new car or even credit cards, that has actually ticked up since the JOLTS report dropped to about 95% probability from 92% probability. When we get the jobs claims out later on today, that could reinforce and increase probabilities. And certainly tomorrow, depending on what we get from the overall jobs report, we can see chances potentially, if we get a rough jobs report, increase to about 0.5% rate cut. Right now, we're baking in about 0.25%, Marky.
We'll see what the Fed decides later on this month as it.
Yeah, well, I will say her comment that President Trump fired her because of the low job report, that's not accurate. He fired her because the data has been wrong and they've had to revise the data. One word here or there is really, I would say, misleading, which is, part of the reason that people don't trust that reporting. So August report comes out, you got 22,000 new payroll jobs, which was far below expectations. Expectations were at about 75,000 jobs. So unemployment ticked up 4.3%. So we're concerned. I mean, that's a 50,000 short on jobs. And they revised the job report back into June and they lost more jobs. There was 13,000 jobs lost. Also, July was trimmed down too. So we're seeing, numbers revising down, which is quite scary. Also, it's the first time that we've seen the job hoppers not do well. And so this is a little tip for people out there. For the last 5 years, job hopping actually was a benefit. You would job hop, and you'd make more money. Right now, they're saying they think the trend will continue, that job hopping will actually be a negative. So there is something to be said of maybe just trying to make the best of the situation you're in and try to improve yourself and add as much value in the current job that you have, as opposed to looking to the next thing, the next thing. So unemployment 4.3%. That's the highest it's been since 2021. And Powell talked about this. He talked about, what he's been talking about for the last month, which is a big change, which is that despite the fact that unemployment, or despite the fact that inflation is still high, he's flexible now. He's willing to have a more aggressive stance on rates, which typically is something he wouldn't do. He would just kind of hold firm, but he's alluded to the fact that he's going to do at least 25 basis points. And there's even some people who believe he'll go even more aggressive, maybe 50 basis points in the next meeting. September 17th is 16th and 17th of the two big days that a lot of things will happen. So if you're around, you should watch those dates. If he goes down 50 basis points, it's a pretty telling sign, in my opinion, that he thinks the economy and jobs are worse, that the reports are going to continue to be bad, and he's going to get aggressive and ahead of it. So let's jump to the next clip here on this.
Generally speaking, we have a fairly weak jobs report here. We have all the indications that employers are being very cautious with who they hire and how much talent they want to retain on hand. One interesting note in the revisions is that we actually have the first payroll decline post-pandemic in June with a loss of 13,000 jobs. So there have been some significant downward revisions over the course of the past few months. We are on a trajectory where the labor market is not collapsing, but it is visibly softening.
I think
So what they're saying is it's coming in worse than expected. The payroll data, which is a better accurate way to look at things. Rate cuts tend to boost asset prices. So you've seen a lot of assets really perform well, precious metals being one of them. So it'll be interesting to see what happens over the next month or two. And September 17th is going to be a pretty big date in terms of what they're going to do. Does lowering rates give confidence? Now, I just saw a small business report, talking about how these lower rates is giving them confidence in small businesses. And this is a study that was taken by small business owners and the Small Business Owner Association. So small business owners are starting to feel like there's going to be some opportunities, which is good. That's really important. That could help with our unemployment. It could help with just overall tax revenue that we need, more jobs, more opportunities. I also think the tariffs are giving some small business owners some opportunities. Some are hurt by it, but I also think some are going to benefit by being able to fill that void that some of these overseas products will have. So it's interesting. Yeah, it's quite interesting to see what's going to happen. Polymarket, great place to look. I always look at it. I'm not a gambler, but I said if I was a gambler, this would be a place that I would love to take a look at, just because they have so many interesting stats. 25 basis point cut in September, 81% chance. 50 basis point cut, that's up. There's been a lot more talk about maybe going 50 basis points, and watch out if that happens. Watch out for the metals price. A lot of hard assets will do really well if we continue to cut rates, because it'll push down the value of the dollar, and tangible things that have a limited supply should perform well. So I think that's pretty interesting. So yeah, Polymarket, interesting stats here. Obviously, they're sharing, they're changing day to day. Let's talk about gold. Everyone's talking about gold. Gold broke 3,600. It's been the news. Everyone's talking about it. I'm getting calls. I'm getting texts. People are just coming out of the woodwork. People that I've been talking to for years have been finally ready. I've been having a lot of people call me about storage. How do you guys store the metals if we want, or how do you ship it? I'm just getting tons and tons of questions, which is always great. Obviously, it's a great time to get into gold. I always say it's a good time to get into gold, but people get excited when they see these prices. So let's cut to a quick clip here of what they're saying on Fox about the gold price.
Goldman's coming out and saying that the sense that the Fed is losing or being damaged can take gold to 5,000 from here. You've talked about gold a lot in the past. Where do you see it going?
I see it going higher, but not necessarily
Not
for this.
5,000?
Well, not necessarily for this reason. I mean, I see it going higher because of what we talked about a minute ago, and that's what's happening in Europe with their higher rates and the loss of confidence in their economies and stuff. That is a positive for gold right there before we even get into this second derivative, whether or not there's a loss of Fed independence.
I love this. And if you go back the last 5 years, you'll watch these clips and they'll say a number, like they'll say, not 2,500. Oh, no, that's not going to happen. Not 3,000. That's not going to happen. They laugh it off. Yeah, it'll get there. And then it's broken through every all-time high. So we're sitting above 3,600 today. Silver's right very close to 41. Also broke through that barrier of 40, which I talked a lot about, mentioned in my book. And for anyone that hasn't picked it up, check it out. It's on Amazon. But yeah, I think this 5,000 number is a target that a lot of people are looking at that seemed unrealistic, but there's a number of things that could happen. I think cutting rates will help gold. And I think too, what if a lot of this private money that's in treasuries goes into gold, right? If they decide that it makes more sense to have gold as a hedge than treasuries, because in essence you're buying treasuries as a safety play, right? So gold could arguably be that same safety play. There's a lot of talk about what's going on with the Fed and President Trump's sort of aggressively pushing his agenda. Any way we look at it, we're going to have a different Fed chief in May of next year, and I think we're going to go cheap money and get rates down, and I think it's going to be great for gold. I think it's going to be very similar to 2009. But yeah, I mean, everything President Trump's doing, removing, key figures in the Fed, trying to push the Fed to be more aggressive, and it's sending a message globally that, we want the Fed to lower rates and we're going to be aggressive. People are concerned about the space between the president and the Fed, and there's always been that separation. But any way you want to look at it, gold continues to soar. And you're seeing it in a lot of different ways. You're seeing it ETF buying, physical buying. So it's been pretty fascinating over the last 2 to 3 weeks. But I think as soon as Powell changes tune, then you saw the gold price really kind of come to the forefront and get people excited. But let's not forget about, let's jump to a quick thing here, and then we'll jump into silver after this here.
We're talking to people today about investments. Let's see if we can get somebody. Excuse me, sir. Do you have a retirement account?
I do. I'm invested in some annuities.
Fixed income? How is that?
It was better a few years ago. Each year, it buys less and less, barely keeping up.
That's where gold can make a difference. Unlike fixed payouts, gold rises with inflation, so you're not stuck with a low fixed payment.
So gold isn't stuck in the past like my annuity?
Don't let inflation erode your retirement savings. Invest in gold. Invest with Noble Gold Investments.
Yeah, and silver. Silver leasing rates are really important for us to talk about. This is what COMEX and everybody, LBMA, all these are the rates for them to borrow silver. And there's a real issue here with physical silver, which I've been talking about for months and months and months, is that I predicted that we're going to have the same thing that we happened in gold, where there's just not enough silver for all these contracts that are out there. So you're seeing these lease rates at 5%. And if you go back, look at this chart. I mean, we've never seen lease rates, borrowing rates, because they can't get the physical, but they're supposed to have it because they sell contracts. So they're paying a premium. They're paying a 5% premium to have it, to borrow it, and to have it. It's important for people to understand this, because at some point they can't do it. They can't lease it. There won't be enough. And so much of silver is used in industry that they're going to run out of it. So if people continue to buy it, you could see lease rates get up to 7, 8, 9, 10%, which will translate into higher prices. Even future contracts right now on COMEX trading 70 cents over, very unusual. So, I think for a safety point of view for people that understand this, they realize like, why would I buy a contract? Why would I buy an ETF when they're leasing it? They don't even have it right now. They're having to spend a fortune to lease it. And it reminds me a lot of what happened during COVID when, they were trying to buy silver and paying huge premiums. Eventually the price catch up because COMEX and all them, they're going to win eventually in this game. And so you're going to see the price continue because no one's going to lease it at 5% over unless they feel it's going to get to 45 or 47 or 50. So there's shrinking physical supply of silver. It's shrinking in London, and it's important. It's important to note that this is where things are going. Also, we've seen an increase in deliveries where they're delivering out of Europe. They want the silver here in the U.S. People want it closer to home. So this is another factor when you're looking at this is that you can buy the physical. You don't have to pay these premiums. And tariffs are a part of this also, right? You have to factor that into it. Some places are going to have some tariffs on silver purchasing. So it's important to look at. It's interesting. And then let's just talk about the dollar and the currency and like what's happening too. Big meeting. Everyone's trying to take down the dollar. And we had this massive summit, the Shanghai Cooperation Organization, the SCO. They had a big meeting with China, Russia, India, other Asian countries, and they want to contest the dollar, similar to the BRICS. They want to move away from the dollar, and they talked about this CBDC that China wants to release. And they've tried to release different currencies. They want to catch momentum. But let's cut to the video where we talk about the CDBC that they're trying to release in China.
The headlines are buzzing. At the latest Shanghai Cooperation Organization Summit, Xi Jinping unveiled his boldest financial move yet, an electro-yuan payment system tied to a new SCO development bank. For decades, the US dollar has been the beating heart of the global economy. It's not just a currency, it's a system of trust, trade, and stability. From energy sales to cross-border loans, the dollar anchors international finance. But Xi Jinping sees this dominance as both a vulnerability for China and an opportunity for Beijing to rewrite the rules. That's where the electro-yuan comes in. Unlike traditional digital banking, this is China's state-backed central bank digital currency, scaled up for international use. And the newly proposed SCO Development Bank would act as the engine, giving loans and settling payments not in dollars, but in China's own digital currency. The idea sounds simple. Bypass the dollar, build resilience, and tie partners closer to Beijing.
So similar to what we did with the petrodollar in the mid-1970s, this is what China is trying to do. They want transactions to settle in their new CBDC currency. And Russia was at the meeting. India was excited to be at the table. So they have a shared vision of moving away from the dollar, and China would love to be able to use their own bank because it's been this loose relationship, and they want it more concrete. So similar to what the BRICS is doing, China's trying to do it in a different way with the SCO bank. It's basically like a CBDC, which is just another way for a bank to have control. Anytime you allow a country to allow control where something settles in a digital currency, you're in trouble. That's why we're not hopefully ever going to do it here in this country. But it's quite concerning that they're moving in this direction. BRICS also had a meeting in September, early September. Brazil was talking about doing more trading, more integration. They're not happy about the tariffs. And so you just see the world shifting, right? They're shifting away from the dollar. The tariffs obviously we want the tariffs for us. It helps us grow as a country. It keeps more workers here, working here, gives us a little bit more of an even playing field. But the world's not happy about it. They're trying to shift away in a different way, and they're saying the tariff is sort of blackmail, right? So they're moving into different ways for them to transact business, and all of this happening at the same time as our economy is not doing its best. And so you have this situation with Powell lowering rates. We have the world going away from the dollar. And there's just this big shift. And what you're seeing is central banks buying gold. Now the big move that to get gold to 5,000 is what they're talking about is more retail investors shifting from treasuries into gold. And even if 1% of the retail buyers moved into gold, 5,000 would be gone in a second. I mean, we're talking about the amount of money, billions of dollars shifting into gold. So it's pretty interesting what's happening out there. Overall, I think, looking at the playing field, silver's done great, outperformed gold this year. It's outperformed most other assets. I get into it in my book. Silver is the new oil. If you haven't checked it out, it's on Amazon, or you can call us and we'll get you a copy of the book. But overall, assets are winning right now. And I think with lower rates, real estate's going to do okay too in the next few months. We're going to see a resurgence in the real estate. But it's pretty interesting times, and we need to move very carefully in this country. On top of all that, we have the greatest, most unbelievable debt that we've ever had at $37 trillion. So anybody that's wants to learn more or get educated about what we do on the physical side, whether you have an IRA, you might have an old 401k, you might have an annuity, you're looking to get out of something, give us a call. I also think with rates going down over the next few months, next year, the returns in the banks should go down too. And I wouldn't be surprised if we see rates in banks in the low 3s by next year. And then I think they'll trend closer to 2 or 1%. So if you have a lot of money tied up there and you're looking to see about hedging or going in a different direction, we can obviously do that for you too. So hopefully I gave a lot of good information: unemployment, jobs, silver, gold, BRICS, SCO, China, the Electro Yuan. Went over a lot today. If anyone has questions, feel free to contact us, talk to one of our representatives. We talk to people on the phone, live people. So if you want to talk to somebody that specializes in this, give us a call at Noble Gold Investments. And as always, thank everybody for watching.